Alternative methods to visualize price. About to start soon. Okay, 3, 2, 1, go. Welcome to another video from our price action strategy webinar series. Today we will discuss alternative methods to visualize price. First, a risk disclaimer. CFDs and FX are leveraged products and carry a high level of risk to your capital. It's possible to lose more than your initial deposit, and you may be required to make further payments. These products may not be suitable for all clients, so please ensure you fully understand the risk involved. If you have any questions, reach out to support@velotrades.com. So today is about alternative ways to visualize price. So what's the problem? What I prepared for you here is a standard time-based Japanese candlestick chart. In this case, we are looking at the Euro-US dollar 30 minutes. In other words, every green bar you see is a bullish candle to the upside, where we closed the bar at a higher price compared to the opening price. You typically see on both ends of the bar that indicate that the fluctuation in that given time period is again higher or lower compared to the opening and close price. So it's 4 pieces of information you get in every Japanese candlestick. It's the opening price, that's the low of the candle, the high of the candle, and the closing price. And if the closing price is higher than the opening price, we call it a bullish bar. If the closing price is lower than the opening price, we call it a bearish bar or candle. The problem here now is that when you look at what happened for most of the day in this Euro-US dollar 30-minute chart was that price fluctuated in a fairly narrow range, yet it consumed most of the space for that particular day on our chart. The vertical white dashed lines indicate the end and the beginning of the day. So the one on the left-hand side, that day, most of the time, price fluctuated in a fairly narrow range. And then only after 6 p.m., because some news got released, price then eventually broke out to the upside and literally exploded higher. The following day, kind of similar picture, pretty boring Asia session, nothing really has happened well into the European session, when suddenly some new news broke and the market completely reversed back to where they've been a day before. It's quite typical, by the way, for currencies that they love to retest levels, even if you think the market has now kind of moved on and will not see a particular level for a long time. Then that's exactly what currencies like to do. They like to come back to retest these levels. But it's particularly difficult for traders from a psychological point of view, because they find it hard to maintain and execute a trading strategy well if the market kind of whipsaws up and down. And typically the agile trader who's able to benefit from an impulse or from a short limited trade is in a fairly good position to benefit from market movements using leverage positions like CFDs. Again, I refer back to the disclaimer, and nothing we discussed today should be really seen as a investment advice. This is all for education and has educational purpose. But the problem hopefully becomes clear that for most of the day, nothing really happens, but the chart is just consumed with these bars that go up and down and up and down. And suddenly we have literally this explosion to the upside. And 1, 2, 3, 4, 5, 6, 7 bullish green candles in a row. So that's 7 times 30 minutes, which is not necessarily like a very slow move. So it was a sustained move. But you see you see the long wicks here that grow out of a bullish candle here. So this candle has already gone as high as when the 1, 2, 3, the 3 candle 1.5 hours later we revisited this price again and broke above it. So that makes it really hard for a trader to get into a position when it's really important, i.e. when the market moves really fast. And that's the problem with time-based chart. A lot of real estate and space on a chart is wasted with stuff that's not really relevant. And the areas when it gets very important, right? That often is very squashed and limited to a couple of bars. So what can we do about that? And today I want to discuss two alternative methods of visualizing price. One being what's called a range bar based on a tick chart. The second option is called a Renko chart. And I will also show you how you can get Renko bars into your Metatrader from VeloTrades without purchasing anything, how you can freely download that indicator into your Metatrader platform. So let's compare this time-based chart with how a tick-based chart look like, and then move over to Metatrader 4 to see all this in action. So the same chart that I have here as a time-based chart looks like that as a tick-based chart. So you see that now on the left-hand side, only very limited space has been consumed for the time between midnight and 6 p.m. in the afternoon. Why? Because we have not seen a lot of volatility in the market. That happens a lot. Just one example would be every first Friday of the month, we get unemployment numbers out of the US, and the market typically waits for this number in anticipation and trades in a fairly narrow range. So nobody really puts a big position on in this time period. But that changes very quickly once the news has been released, right? And then suddenly you have a lot of volatility. But again, you're not interested in that tight range that emerges ahead of news. You're interested in the explosive move that we see afterwards, and you want to participate in that. And that's basically what the tick-based chart asks you to do. You see that after 6 p.m., that's again where I've drawn this vertical yellow line, after 6 p.m., the market also here explodes to the upside, but we get a much cleaner, more complex picture of what has actually happened. What looked previously as the market would just literally go up vertically up and down looks now like a fairly clean move, doesn't it? So you can see that the market builds peaks and troughs as it just climbs up the ladder throughout that day. And regardless of what strategy you fancy and prefer, if you want to kind of trade short new higher highs to get an impulse to the downside to retest then what was previously resistance and support, well, that's entirely possible because you can very clearly see we have 1, 2, 3, 4, and in the end 5 higher highs until the market then turns around and collapses back to where it was the day before. On the other side, if you're interested in trading pullbacks, this now gives you a much cleaner picture when the market moves back into support, again moves back into support and so forth. And these are all from a setup perspective. These are all good areas to get into a trade. Again, let me remind you that this video is not meant to give you any investment advice, but from an educational market dynamic point of view, hopefully that makes it clear how you can benefit from this enhanced visibility during periods of very fast price action and fast movements in the market. And look what happened then the following day. Again, nothing much until 11 o'clock. That's why we don't see a lot of new candles. And then suddenly at 11 o'clock, the market completely reversed, completely turned around, dropped down, and what really looked very difficult to trade on a time-based chart, again on a tick-based chart, looks much more differentiated. You get made aware of the move much earlier, and you can see at least one nice pullback area where we go back to this brown line or orange line, and then continue our impulse to the downside. And the further we go, obviously, the lower the probability is that this move will continue. So just again, in terms of definition, let me just be very clear. What is a range bar? A range bar now does not look at a time frame to build a new candle. A range bar is typically, let's say, you use a 30-minute chart, as I did a moment ago in Euro US dollar. Each candle beginning and ending point, not the price, but the point in time when it is being drawn, is defined by time, and the candle also will get a timestamp. If we change that definition of when does a candle start to how many price movements do we need to see until we want a new candle to start, that gives us an entirely different picture. In this case, I defined 120 price movements as the requirement for drawing a new candle. So in other words, whenever the price has moved 120 times, that's the time when I want to draw a new candle. You can change that setting. That's then probably that proxy that is fairly similar to what you have on time-based charts. The chart will always look entirely different, especially when we have fast-moving markets. Let's now have a look at how that comes together on Metatrader. So Metatrader, as you know, and that's one of the platforms that is being made available to you through value trades. We have a contract with MetaQuotes who maintain and make that Metatrader 4 available, which is the most popular CFD broker platform on the planet. It's quite intuitive, and there are a lot of additional indicators, strategies, and functionalities available. So very, very powerful, very, very powerful tool. What I'm here now is a 15-minute Euro US dollar chart. Let's bump that up a little bit to 30 minutes. And again, it's a little bit difficult to see what's happening, because you have like here we have, well, directionally we're going up, but a lot of whipsawing back and forth. Suddenly big gap. Well, that will also be difficult to trade with a range bar or any other means of visualizing price. And then we go up and we pretty much go down the same way, test support in this gap, move to the next day, and we know that Euro US dollar just loves to close gaps, and that's what it has done so far. So fantastic move within typical parameters. So that is right. The move is really nice, but it's very hard to trade, as you can see, because you have a lot of consolidation in between, and maybe Fibonacci gets you somewhere. Yeah, actually Fibonacci would probably not be too bad here, but especially when the markets have moved so fast, like they have in the last couple of hours today, then it's really, really hard to trade. So when exactly would you get into this impulse? Would you trade it when this gap has closed and go bullish and go long? Or would you really expect the market to overshoot and go to the downside, and when you're stuck into a trade late in the day? So you want to typically you want to do two things. You want to be early in the move, and secondly, you want to spend as little time as possible in the market, because the longer you're in the market, the more expose yourself to risky movements, and that can be tricky, especially when you trade these kind of leveraged products. Let's have a look at how the same chart looks like in one of these tick-based charts. I've prepared one for you. Yeah, here it is. So let's just have a look at what my analysis has kind of revealed on the tick-based charts for the last couple of days. So we had this very explosive move to the upside. But even in that move to the upside, we have some where the market paused a bit, right? And suddenly that becomes visible. It's something you just can't see on a time-based chart. The market paused here. The market paused second time again. The market paused for a third time again. And then you can clearly see by these movements, the market is running out of steam. So either you get, again, another massive impulse to the upside, or the market starts thinking about a short-term reversal, which event eventually did, and it went to the downside. So one thing the tick-based charts give you is very early, you see here the compression of the three lines. So very early you see that this move is kind of evolving and unfolding. And you can, even if in that fast-moving market, you can pick the spots where the market sets back. And if you want to trade kind of in continuation with the market to the upside, these are all areas where it makes sense to think about a setup to get long. Right? Again, it's not a trade recommendation, but from a market dynamic point of view, really nice way. So if you missed the jump up, not a problem at all. Don't chase markets because you don't know if a market comes back kind of immediately to the entry point. Use these pause points when you have a time to look at the pin bar and the inside bar video. You will also learn about the market kind of breathing in and breathing out as it moves along. And you want to use the time between the breathings, the time between the breathings, the breathing out. You want to use that to get into the market. These are the areas we are interested in that give us a higher risk reward probability from a trading perspective. Okay, so imagine you would have missed that move. You could have gone in long here. There's another opportunity. There's a third opportunity. And kind of build up your position until you then either get stopped out or you cash in your profits. And even from that kind of first point, the high, we have another, what is that, 150 to the upside. Surely, given the daily volatility we have in something like Euro US dollar, more than enough for a move for a couple of days. So if the market now turns around, you get made aware of that much earlier. Again, we have a bit of a compression here of the three lines. The lines are crossing. And a really interesting kind of first point where the market then makes a pause is here, where we go back to this bluish line, and the market continues the downside for another 100 points. And you can go back and back and back, and this is just this pattern will emerge on a very kind of robust basis on a very robust level. Very different way of visualizing price. You get earlier into the move, and you will be able to identify much better and with more clarity when you can still join the move. On the other side, if you're in a losing position or you're looking for getting out of a trade with a winner, if these lines compress again and cross to the other side, odds are actually that we are moving to the other side and you want to get out of your position, right? So you may ask yourself, how on earth do I get this into Metatrader? Because Metatrader traditionally does not allow for tick-based charts. Metatrader is completely aligned with time-based charts. That's why you have to use a bit of a trick to use that for yourself. The trick works as follows, and the ladies and gentlemen at VeloTrades will be very happy to help you. Just send an email to support@velotrades.com or go to the website and talk to the friendly and helpful staff there. They will be able to help you or provide you with the necessary software code to get the tick and range bars up and running. So just in theory, how that works is that you take a 1 minute chart, in this case a Euro US dollar 1 minute chart, and that chart only fulfills one purpose. This is the kind of data provider for what's called an offline chart. So that's a little gimmick that Meta quotes provides us with. You can use an offline chart, capture information that gets fed into that offline chart from an online chart, and you have more freedom in terms of your analysis. There are less rigid restrictions. You see this 1 minute chart. allows us to change the time frame to 5 minutes or an hour or daily or monthly or whatever you deem to be appropriate. But let's keep it as the kind of the input chart on the 1 minute level. And this now feeds into this so-called offline chart. And then the offline chart is connected to the indicator that makes the switch in terms of visualizing the price action as I just described. As you then also can see on the top left, the areas like where you could pick time. This has all been grayed out. This clearly shows you that you can't pick a different time. What you can change is, here I've set it to 100 ticks for a new bar. So 120 price movements and a new bar will form, and you can play around that until you get a setting that works with your strategy. So I encourage you to familiarize yourself with this technology and make that kind of actionable for your strategy as it makes sense. Again, if there are any technical problems, the ladies and gentlemen at VeloTrades are very happy to help you. With that. But surely, only a few traders use this functionality, and surely this is a great feature that's available, but not a lot of people are aware of. Especially when we have these news-driven markets, when we have a lot of volatility, when we are looking for trends. Like 1 hour way for looking for trends would be you pick one strong currency, like the strongest currency against a basket of 10 other currencies, and identify the weakest currency against a basket of other currencies, and you just put the strongest and the weakest together, and these are the ones, if that kind of is a new trend that emerges, these are the ones that have the strongest trend potential. Well, and then the whole price action analysis using range bars makes even more sense and potentially gets you into a nice move either to the upside or the downside. Again, no sell or buy recommendation, but from a market dynamic point of view, hopefully a very powerful tool you want to add to your toolkit right now. Okay, so that's one way of visualizing price completely differently, and that's probably one of the most powerful ways to do that. There are also other ways to look at price and not just look at time-based charts. And I don't know if you ever heard of Renko charts, but the idea with Renko, and let's just go back to our Euro-US dollar 30-minute chart. The idea behind Renko is that you try to filter a lot of noise out of the market. So if you just redraw this one box to the upside, so technically what has happened here is that the market has moved up, what is it, 40, I think that's 40 pips, right? So technically the market has moved up by 40 pips. And the next thing that happened, either to the upside or the downside, would be that the market then moves up or down 40 pips. I think in this case, it's probably fair to say if I just duplicate this box to the downside, actually move down another 40 pips, right? And you can do it 5 pips or whatever you're setting. So from a Renko point of view, this bar would be much broader, draw a shorter bar, but technically the information we try to capture would be much broader, right? And we would have kind of one bar to the upside, and the next bar in general just tells us downside 40 pips because we hit first we hit move down to by 40 pips because this move to the upside was only 23 pips. So this doesn't qualify as another up bar. So that's a basic concept behind it. You just want to get a sense of direction in the market. And let's now add a Renko indicator to our chart, and then afterwards I will also show you how you can get the Renko indicator for free from the internet without any problems. So I've already have it here in my navigator. So if you ask yourself, how do I get to the navigator? That would be View, Navigator. And then this bar on the left-hand side appears. Maybe it just looks, for you, just looks like that because it only has the 4 folders, and it's fully collapsed. What I'm interested in is indicators, as I said. And within indicators, you have something that's called downloads, and I've already downloaded it. And again, I'll show you in a minute how you can download that for yourself. And here it is available as Renko 2. The only thing I need to do is now to click and the left mouse button, click and hold it, and drag that Renko 2 onto the chart. Where it allows me to change some settings, like do I want to show the Renkos on all time frames, only on some time frames? Do I want to use a kind of specific colors? Should I, for example, I could highlight the bullish move in blue, but maybe I prefer green. Let's do that. It's lime green. I can also kind of change the setting, like how many moves, how many price movements do I look at? Is it 4 pips? Is it 40 pips? Is it 400 pips? We can, let's say, we can reduce that, let's say, to 20. And we just say, okay. Look at what it does now. It plots a very different picture, right? So in this case, it just looks at the price, and I suppose when we say 20, I think that really represents 2 pip, because we are trading in 1, 2, 3, 4, 5 numbers behind the decimal point, right? So these are the things you need to factor in, and that's why you need to kind of test and play around with your indicators before you do anything, right? So the same principle that I described a little bit earlier here with the green box is now automated and put below the price, similar to an MACD or an RSI indicator, in a separate window. And let's have a look at what it actually does. And then when I will talk about how traders like to use that in the context of their trading strategy. So when we compare with the move here, so we first had a move to the upside, with a fairly strong impulse, then a little bit to the side, and then another impulse. So what Renko does is it goes, when I compare that, so Renko basically, with the exception of the last one, right? Basically, Renko stays green for the whole time, and that's the point of Renko, right? You try to filter out noise, and you don't get nervous, but you get a clear direction from Renko, and Renko for the Asia session pretty much points to the upside. Then typical movement ahead of the European session, a bit of a pause. So what next? While Renko indicates first that continuation to the upside, that then changes very quickly. And for the rest of the day, Renko pretty much, with the exception of these 2 bars, but then very clearly points to the downside. And that's what I'm interested in. So that gives you direction. And in terms of a trade, again, no explicit trading strategy, but in terms of kind of classical analysis with Renko here, is if we get the sense that for the rest of the day, we are looking for predominantly kind of bearish moves. And if I just use simple support and resistance strategy and look at this shoulder, head, shoulder pattern, kind of looking for bearish entries, obviously that would have been a very nice resistance area that one could play to the downside as an entry. And then you can see Renko never really flinches and keep the short side until the market then breaks down. And here when Renko indicates, okay, after this breakdown, maybe the move is over, and one should take the profits if profits have not been taken. So the point here is, and again, application is something I encourage you to play around with the settings also, with the Renko settings and how they make kind of most sense for you with your specific trading strategy. Most traders like to use them in two ways, the Renko indicators. One would be they like to get a sense kind of where's the market moving when the market opens up. And I do know that some traders go down to levels like even like the 1 minute level, and they are looking for a signal that says something like, all right, we're pointing straight up or we're pointing straight down. For example, market opens around 7 o'clock. Renko points in our real direction, so we see a lot of consolidation. So nothing from that point of view. Another view at 8 o'clock, again, we're just seeing kind of whipsawing. Market hasn't really found direction. So that helps traders also to stay out of the trade. Whereas you get these prolonged, and you see here that it just points to the upside very early on. Before this move really explodes to the upside, Renko is already a fair bit in this up move until we then see a continuation of another what is that, 200 pips, 20 pips to the upside. Bear in mind that 1 minute chart, so 200 would have been a bit much. So Renko gives you that clarity. Are we still in that trend? Are we moving in the direction, or is this thing just whipsawing back and forth? And if I'm a trend following strategy believer, then I probably don't want to deploy that trend following strategy. But on the other side, if Renko kind of jumps up and down, that's typically where many people will get their range strategies out and will kind of seek to play the range and see if they can kind of get in short on the upside and long on the downside with a view to test the other side of the range again. So that's one way of looking at it. It's then continuation, and the other one that I just explained was, especially when a new session opens, can we see some direction? Is there some confirmation that comes from the Renko indicator? Again, please play around with the Renko settings. So kind of blindly going into the trade and just believe that because Renko points in a certain direction, you can kind of follow that trend, and Renko will tell you before the trend actually is exhausted that that is the case. That can be the case, but in some trades you will be stopped out. It's just an additional filter criterion, and can be actually a very powerful one. And I know many traders who use it a lot, especially the ones that trade these market opening strategies. So play around with it. And I also indicated that you can get it for free. So you may ask yourself how. It's actually quite simple. How do I get it? There are a lot of codes and indicators and other scripts that are freely available. And the way you can find them is quite simple. You just go to View Terminal or Control T. And I already picked the Code Base tab. The Code Base tab. And the Code Base tab lists all sorts of indicators and scripts and expert advisors and other strategies that are freely available. And what I just did is, before I recorded this webinar, I was looking for Renko indicator, and the ones I've shown you, I found it actually on here. Just went to RENKO, Renko, and just used the first Renko indicator that I found. If you want to have a bit more information about the indicator, just click Enter or View. It will take you to the appropriate section on the Metacode's website with more information. But if you want to use it straight away, just click Download or D, and it will download the indicator into the Navigator download section. It also does all the compiling, and everything happens in the background, and the indicator is literally available 20 seconds after you've downloaded it for free, no problem, and no questions asked. As always, when you use software that has been provided from a third party, make sure before you could ever consider even using it for live trading that you test it out, that you know what happens, that you know exactly what is a Renko box, how is it defined, and how can it add value to your trading strategy. So what it has done, it has compiled the code that has been downloaded from the internet. You can play around with the values. You could even contact the coder if you want to. and deploy that to your chart. So in this case, actually, I downloaded a Renko version 1. Let's see how that looks like on the chart. Let me remove Renko version 2. That is Control B, by the way. Sorry, no, Control B is objects, Control I is indicators. Let me remove what Renko 1 does. Renko 1 is different in the sense that it kind of overlays the Renko on the price chart, and maybe that gives you, it's slightly different way of visualizing it, but it does the same thing, right? So the boxes that you've seen before are now, excuse me, are now being drawn on the market. Let's just try to highlight some of the boxes. I say a little bit different in their shape, but they do exactly the same thing. So one box represents a certain time frame. What is now this accounts for is that if the market moves faster, that book box will look squashed, obviously, because we don't have base charts combined with Renko charts. If you would combine them, they would probably look more disaggregated, like the indicator that we had in the separate window under this chart. Okay, so that's a very good alternative way also of looking at Renko, where you can see that it really nicely stays in that trend. Maybe that's something for the beginning until you understand the concept of Renko, and then you flip over to the other way of visualizing it. It gives you a cleaner picture, which is quite easy for you to see. So I can actually have both Renkos up. Obviously, you have different settings right now. That's why they don't harmonize. But if you then have both Renkos up, you can probably compare and contrast kind of the different outputs, and it will get you much closer to using to use that in your own strategy. See, so let me just have a look at the 15-minute chart. So you have the Renko here with a different setting in the separate window, while I have a Renko 1 indicator directly overlaying the price. I think there's a lot of information. Let me just summarize everything and get everything together for you guys. So the problem with time-based chart again is that markets often move very, very fast. And the area that's most interesting for us as day traders, we seek volatility. Typically consumes the least space on the chart, which is a big problem. The way to fix that is to move away from time-based Japanese candlesticks. Candlestick includes high, low, open, close price, to what's called tick-based charts. Tick-based charts are based on price changes over time, and here the definition I've chosen is 120 price changes or tick changes that are the basic definition for a new candle. If you have any questions how to get that onto your Metatrader application, please reach out to the ValueTrade's representative. But I already gave you some hints on how that actually works. So very, very powerful, and in a fast move, we just have much more visibility when we're actually hitting support level or resistance levels, and that's valuable information. That's much more powerful, typically, that you can see on the time-based chart, and can really feed into your impulse or trend following strategy. Secondly, we had a view at Renko, and the Renko idea is that you try to filter out a lot of noise and movements up and down, and you define a Renko is just defined by the market moving a certain number of pips in a certain direction, and that will define a new Renko bar. I think here I've set it to something like 4 pips or 2 pips or something. That's why you see a lot of Renkos, and here I've set it to, this looks like 10. Familiarize yourself with it, and it could be a really interesting filter or tool that you add to your toolkit. I know many traders do that successfully. How? One group of traders use it for identifying areas to get or stay in a trend. And two, I know a lot of traders use it on a 1 or 5 minute chart for market opening times to get a sense, is the market in a trend, or are we kind of just whipsawing back and forth, and depending on what they see, they would then try to deploy a trend following, or if a market is whipsawing based on Renko, they would try to deploy a range trading strategy. Okay. Again, all this was not any trading recommendation or buy or sell recommendation. This is all educational purposes. This is all other videos that we produced on the price action strategy webinar series. Thank you very much for your attention, and if you enjoyed the video, please have a look at the other videos, especially the pin bar and the inside bar video and the Fibonacci video. I think they really nicely complement the story that we are trying to get across with these videos. Thank you very much.